Okay, so a lot of these videos go like this. Here's some shares, here's some bonds, here's what I googled, here's my affiliate link. Here's what I'm doing, now off you go, invest your money, best life, yeah! We need to take a step back. This is what you need to know. Hi there, my name's George Agan and I'm a Chartered Financial Planner. Now, I firstly want to warn you, this video is going to be a bit more straight talking than we normally do on this channel. Please know that this is really trying to come from the right place. I am hugely supportive of anyone trying to improve their financial position. A lot of these videos are actually missing the point about what actual beginners need to know. At the very least, I hope it gives you some questions to ask yourself which might lead to things working out better for you. So what's at stake? I truly believe people should invest, but it has to be done right for it to deliver a good outcome. What would be a terrible result is that you dive into investing after watching a few videos online, never really get a good footing, don't really understand it, but that's okay because the market's going up. Remember, everyone looks like a genius in a rising market. Then it changes, the market goes the other way. You feel unsure and, to be honest, a bit out of your depth. You've never really had a loss like this on paper before. You're watching headline after headline of things saying it's going to get worse. You snap and bail out, cashing in your sinking investments. You realise the loss, then vow never to invest again. Stuff like this happens all the time and it's absolutely devastating to you and your family's wealth. It shouldn't be like this and it doesn't have to be like this. Here's some questions you need to ask yourself. Question 1, what level of knowledge do you have? So you need to ask yourself, what's your educational level with investing? Look, no one starts being an investment guru and that's totally fine. But if you're starting out, think about the money that you're potentially investing and the time it took you to earn it. If you don't know anything at all, would it not be better to maybe understand it to a decent degree before you start diving in? If you have money to invest but maybe don't have time to learn enough, and trust me, there is a lot to learn, then chances are you'd probably be better just getting advice from someone you can trust. The best first investment for a beginner just may be in yourself. And I'd say especially if you have a larger sum, this may be worthwhile. The great thing is that there's now more places than ever to learn this stuff. But just make sure that you're choosing the right sources to learn from. So question 2, why are you investing? Now look, you don't have to have a specific purpose. It can be general, such as just to build a nest egg for an undetermined date. But ideally, you do need to try and have a why in your own mind, a purpose. It can be retirement, an ideal lifestyle, family, whatever. This will not only make you a better disciplined investor, but it will also identify if there's something specific that you maybe need to build towards. And for example, if you have a time horizon, which is how long you can be investing for. This can be really useful to have this why established because you can set a clear goal, which you can work towards, and then you can hopefully use it as a starting point to remind yourself that it's the long-term return of the market instead of just getting caught up in all the ups and downs in between. Remember that investing in shares generally is only something that should be done over 5 years or more, because without this you may struggle to have the time to sit out the ups and downs. If you're putting your money for a short time horizon, you seriously need to be asking yourself the question, do I have time to sit out a volatile market? So question 3, do you understand the two sides of investing? So look, the first side is technical on what you're investing in, asset classes, why diversification might matter, tax wrappers, why you should consider an ISA, all that. You can watch Understanding Your Investments Part 1 and 2 for a starting point with that, which is one of my videos. But you can't be a good investor by knowing only this. You want to make sure you've got a decent starting point so you understand enough for it to make sense. And the second side is emotional. This is how you will react to the experience of investing. Morgan Housel, writes in The Psychology of Money, I think he sums it up perfectly here, which is, knowing what to do tells you nothing about what happens in your head when you try and do it. You need to know if you've got the right mindset for investing. Some people really struggle with this. And as an investor, you need to be capable of being an optimist, really. Pessimists generally make terrible investors, as they always see the worst in the situation, so always buy into the negativity, which, trust me, is everywhere when the market goes down. You need to invest a bit of time to try and understand this. I've got episodes called Money's a Story We Tell Ourselves, which goes into this, as well as the biggest risks to your investments. And it just gives a bit of a better explanation on the personal side to personal finance. Just don't underestimate this. This is a massive, massive part of whether you'll be successful at investing. You'll probably feel stronger about losing money than making money. This is called loss aversion. You need to understand that investor psychology is probably the most important element of what you're doing. So number 4, do you have a good control of your finances? Have you ever done a budget? Do you have a good steady stream of income and a good handle of what's coming in and what's going out? Because what you don't want to do is start investing and then have a month with a lot of expenditure and have to dip into your investments to cover this, because it could just end up being a really bad time to do this. You could be forcing yourself to sell at the worst time. There's a big difference between saving and investing, which I go over on 10 things schools don't teach you about money. But if you don't have overall income and expenditure and savings in place, things could easily go wrong for you. So question 5, what risk are you happy to accept? So you need to understand what your attitude is towards risk. The market will go up and down, but we obviously hope and expect it'll be positive long term. You have to accept that when you invest, you are hoping to be paid for the uncertainty, and will have a point when your investments will go down. This is completely normal and should be expected. The key thing is to try and understand how much of a drop would make you nervous, and this is really quite personal. The trick is, imagine the amount of money you have now, or if it's not very much, just imagine like a reasonably large sum, like £100,000. Imagine if it went down 20-30%, so you went from 100,000 to maybe 70,000. Would that make you panic, or would you be happy to wait it out? Remember, that happened with stocks in March in 2020. Because if you're investing in companies and in shares, you have to understand that this volatility, the ups and downs, is the price of admission. Spend the time to really think about this and put yourself through it mentally. Because what will happen if you do that when that time comes, hopefully you won't act in the wrong way. Question 6, what risk can you afford to take? Okay, so do you have enough saved to cover 3 to 6 months of your income, and have you protected your income? If not, in my view, I just think you've got no place thinking about investing. Obviously, views are individual here, but seriously, what would happen if you lost your job or got ill? If you want to build wealth, you just have to make sure you lay the foundations. You can have all the appetite in the world to take the risk, but your financial position might mean that you literally can't afford to take the risk. Remember, your ability to earn is often directly connected to the market. Think about this, what happens when a market crashes? Most of the time when that happens, the economy is pretty much in the toilet. So you need to try and build a framework which manages not only your risk, but also the risk with your capital and your personal circumstances. Question 7, what type of investor are you going to be? Do you have an investment plan? Is there a strategy you have in mind, or are you just dipping in and out of things and changing your tact all the time? How does it fit your goals? Have you thought about what might happen if you throw all your money into a single sector and things change? Imagine if you'd been all in on airlines in February 2020. Are you going to be investing in funds? Are you going to just start and jump into buying single shares? One of my episodes is 4 harsh truths on owning stocks. Watch that. It's always your decision, but I'm just trying to help you make sure that you have the highest chance of getting a good outcome. I'd also say that, look, if you're getting information online, you need to really curate the source of this information. With investing now, there is so much noise, it's ridiculous. I'll say it as well, don't just believe me. Go and check what I'm saying against other qualified sources, but just think, are they well qualified? Do they know what they're talking about? And are they consistent in what they're saying? So final thoughts. Okay, look, I'm well aware that I've given you nothing really as far as a step-by-step, but that's because I can't, because it's so individual. I really, really do believe that there is more value in asking these questions and you thinking about the answer than me giving you some sort of convoluted step-by-step, which will be completely wrong for you individually. What I would say is that it's worth taking the time to commit to get things right. Investing should be something you do over your lifetime, so it really pays to spend a bit of time getting a good handle on this. The best way to do it, in my view, is just to have a cohesive plan. And I always suggest, look, if you're not sure, consider your first investment to maybe be in yourself or an advice specific to you. All these questions is something that someone like myself, a regulated individual, would have to answer before advising a client. So it truly is the beginning steps. So I hope that's helpful and been useful and a good starting point. This has been Principles for Personal Finance. I really appreciate you watching. See you next week.